The housing market is not crashing. To all the crash bros out there, hoping and praying to see some 2008 type of event, unless something goes on in the world outside where the wars get worse or something else, it's just not going to happen the way it did in 2008. Stick around, I'll get into some reasons and explain to you why I just don't see that coming this time. Good afternoon. Today is Wednesday, October 8th. My name is Adam Kahn, and I'm the Rational Investor. Before I forget, do me a favor, if you haven't already, hit the subscribe button. I really appreciate the help. I love seeing how the channel's been growing and how we're doing. Um, but that helps YouTube's algorithm, and it helps to get the information out there. And I really enjoy this stuff, and I'm hoping that others learn from it and find some good information on it. You could also hit the like button. That's really cool as well. And then I'm also going to put a couple links in the description on how to open an account with SoFi. I've opened an account with my son as well. He's 13 years old. If you use those links and you deposit $10 or more, it'll give you guys free money. It'll give a little bit of $25 for free. And I think there's some other options there as well. If you do direct deposit and things like that, that get you a little bit more. It also gives my son a bit of a gift. He gets really excited, and I find it really kind. So I appreciate that. Anyway, let's get to the video. Interest rates are high, prices are high, it's all going crazy. Oh my God, we're going to have a crash, right? No, wrong. It's not like it was in 2008. The Fed's got a good handle on it. Now, I picture a scenario where we see prices softening because we already do. But if prices start to drop, that's what will allow the Fed to start cutting rates. That's what they've been waiting for in terms of the slowdown to follow through. The economy's held up better than people expected, including Jerome Powell, who made reference to how impressed he was that we haven't seen more unemployment. Now, don't hear that the wrong way. He is not looking for more unemployment. He's just happy that he was able to raise rates as far as he did without there being more unemployment than we have. So the economy's adjusting, and what we had was called inflation. Inflation seeps through in everything. That doesn't mean that houses are ignored in that thing. So the cost of home ownership is more expensive than it used to be. I don't really see that changing. It should come in where it's not as expensive as it is today. It should improve, but I wouldn't expect to see any big correction in prices. You might see a 10%, and if you're lucky, maybe even a 20% reduction in prices. But by then, I think you'll see rates back into the sixes and demand pick up for people to start borrowing and buying homes again. Now that we pushed into the eights, my guess is if we get into the low sevens or high sixes, people will start to get comfortable with that and be excited to see it as opposed to feeling like it's super expensive. We got super spoiled at 3%, or for those of you who are fortunate enough below that, or even the 4% rates. But sixes and sevens aren't so unrealistic. That's where I got my first home at. I remember trying to get it under 7%, and I couldn't really get it there without buying a ton of points. To be perfectly honest, I'm really amazed with how good a job the Fed's done considering how far behind the eight ball they were. But if you pay attention to other markets as well, bonds have been softening, which is why I think the rates will come down a bit. If things get nuts, there'll be a backstop. They'll start buying mortgage-backed securities if they can. There's a few things that have gone on where they don't want the banks to be owners of homes, nor do they want to be themselves. They've also got systems in place now that if there is some massive default that's unexpected, they have forbearance and they have loan modifications that they didn't have when 2008 happened. The other thing is the loans that are in place are completely different, and the people who are buying homes qualify for the house. They're more comfortable with higher payments than they used to be, which is why I say inflation's real. No different than the price of eggs or the price of a car or whatever it is that's gone up. I live here in Vegas and I like to play poker from time to time. I've been amazed at how big the games have gotten, and I think that goes in alignment with all of that. For the most part, I go to the win. The biggest game used to be a 5-10 game, and it was uncapped. Most people at the table had $2,000 or $3,000 in front of them. There's also the one that was at Bellagio, the 10-20 game, where people would buy in for 5, 10 grand, and there was always a few at the table who had a good amount of money. It's amazing to me how they'll fill up a table where the guy who buys in for the least now has 10, 20, 30,000. And if you look on YouTube, that it seems like there's a game once a week where people are buying in for 100,000 or a quarter million or more. That just didn't happen the same way. There were one-on-one games every now and then, which is a couple times a year for that type of money. And I think that's all inflation, the same way that house prices have gone up. So you're just not going to see them collapse in half. I think those channels that really implore that and go on and on, I think that's more of a hope because they would like the housing to be more affordable, not unaffordable. But their hope is that prices come down so much so that they can buy things on the cheap. I think, like most things, people just aren't stuck like that. You'll see a natural amount of foreclosure come to the market if things start to come down, maybe from some investors who got in a little late. But keep in mind, most of those investors put 20 or 25% down, and a lot of them are well financed to be able to weather a storm. So it becomes more of a financial decision of, do I make less than I expected to, or do I get rid of the house? It's not so much of this panicky, ooh, I have to sell because I need the money. There's always some of that, so there will be, but it's not going to be the entire nation like it was before. The 1% down programs that a lot of these guys point to, well, they're usually pretty specific to a maximum loan amount and who qualifies. When you go back to what happened in 2006 and 2007, it was just so different. People could simply say how much they made, so obviously they were lying about it. They could also say what they have in assets, so they were lying about that as well. And then the loans were all adjustable rate mortgages. I've seen a few people talk about, debt servicing loans that were adjustable rates. And I got to tell you, I've helped a lot of people with some of those loans, and I didn't do any that were adjustable. And even as a company, I mean, I'd have to check to confirm, but I don't remember very many going through that were adjustable rates. Most of these guys knew the math, understood what they were doing, and were comfortable with the type of program it was. In 2006, it was your mom and dad and friends that they were talking into the option arm, that people didn't even understand it. All they heard was some low payment and sometimes no money down because they could borrow money for their down payment on another loan. They had firsts and seconds, so they come no money out of pocket with this wonderful loan that costs very little money month to month. They just didn't understand that after a certain amount of time, they seasoned and turned into a normal loan where the payments increased a lot. Well, you had a large amount of those loans sold, which really impacted the market. Now, this is coming from a guy who's watched business slow dramatically. I don't picture that changing until next year, maybe March or April, when people get back into the normal swing of things. Right now, at least for me, as a guy who does mortgages, things are super slow. And I expect that to continue for a little while. And to be perfectly honest, the longer it goes on, the more people get out of the business. In the end, markets ebb and flow, and normal amount of business will match what should be for the amount of people working it. And then if you even want to talk about the lawsuit, well, that's going to take years to work itself out. And in the meantime, the markets are going to chug along the way they are. My underlying suggestion all the time is, don't bite off more than you can chew. But I wouldn't be as scared of the markets either. I wouldn't not buy a house because I see a big crash coming. I wouldn't not buy stocks. I really want to see people save their money and put it away and invest it. You can't be scared all the time and only invest in gold and treasuries and things that potentially don't have the upside that other things do. Now, you guys need to do your own research. Don't listen to me. The last thing I want is somebody to follow my instructions and take more risk than they're comfortable with. You have to make your own financial decisions. I'm just sharing what I've experienced over the years. And what I've experienced is things go up, things go down. And if you stay within your budget, in the long run, you end up in a good position. And I see a divergence of those that have and those that don't over the next 10, 20 years. As things progress and it becomes harder to get jobs that pay as well and it becomes more automated, I think that's going to become more and more, what's the word, divergent. And you're going to see this real spread between the haves and the have nots. So better to have. And if inflation is real, the cost of owning a home in terms of dollars will go up. Maybe not in terms of other things. It depends how out there you want to get and call, I don't know, Bitcoin or whatever, and see if that stays with inflation. But really, I don't care what it is you like. Spread out into a bunch of things, be well diversified or not. Like, make your own decisions, like I said, and just don't buy a home you can't afford. But I would rather see somebody buy a home they can afford and be well within their means and see the market correct and be in the position to maybe buy another one and rent it out than potentially stay a renter for life because you're waiting for some correction that may or may not ever come. My personal opinion, I think we'll see a little bit of a correction. I don't think we'll have a crash. Um, but I wouldn't want to be renting in the meantime waiting for it, because what if I'm wrong? What if there is no correction? And what if things just keep drifting the way it is? I would hate to get further and further and further away from being able to own. And if I buy too little, at least I have something in the game as opposed to nothing. So, I know there's a lot of crash bros out there calling for it, and they have good data points. I understand the affordability is stretched more than it ever has been. Um, but I'd still rather own than rent. And the other thing is, it gives my family a sense of security too. We know where we are. I don't have to worry about changing schools or things like that for my kid. So, again, I know I said it in the beginning, thumbs up, subscribe, make some comments. Tell me what you guys see and what you think in the market. Know that if you're doom and gloom and just see a big crash, I just see it differently. But I'm happy to discuss it. I like the debate. Have a great rest of your day, and I'm sure I'll talk to you guys tomorrow or the day after.